I'm joined live from Beijing now by Tao Wang. She's Chief China Economist at UBS. Good morning to you. Thank you very much for joining us.
Good morning.
It's the third interest rate hike since October. Are there many more to come?
We are expecting at least 2 more this year, and probably all in the first half. So, yes.
The reason why China, of course, is raising rates to combat inflation. What's your outlook for inflation? Because I know you think that CPI will remain elevated in the first half.
That's right. We think January inflation, because of the seasonality in the new year, has already gone up to above 5%. And for the first half, more or less every month, we're going to see 5 or above 5%. So interest rate is still playing catching up with inflation. Even after the rate hike, we're going to see 1-year deposit rate at 3% only. So the government still has quite a bit to do.
How alarmed are you that China does have negative real interest rates?
Well, to some extent, I think I'm more worried about asset price inflation than the goods price inflation itself. So far, the CPI inflation has mainly been caused by food prices, and a large part of that is related to weather, and which monetary policy can do very little to curtail. But what it can do, of course, to prevent inflation from food prices going to non-food prices. Negative real rates make people who has a lot of saving as bank deposit want to invest in other assets, including the property sector. So raising rates can help slow down that from forming.
And will increasing inflation have an impact on real consumer spending?
I do think that inflation will erode the real income of consumers. So on that front, I think the government's effort to increase subsidies to the poor and also be more tolerable of wage increases in this year will help.
Elsewhere, we're all waiting to see how much the Chinese allow the currency, the yuan, to strengthen. I mean, it rose 3% against the dollar last year. How much do you think it'll rise against the dollar in 2011?
Well, this year we're expecting about 6% appreciation against the dollar. We're looking for RMB dollar to trade at 6.2 by year end. And so it's still a gradual and modest appreciation.
Okay, thanks very much for joining us today.